Hey friends, Lucian here with the Bullish Bears team. Want to make this video on simple moving average indicators, or otherwise known as SMA lines or the SMA indicator. I'm going to go over, kind of read you a brief definition, then I'm going to kind of show it to you more in person. Try to make it as simplified as possible for you. Again, when you're trading, whether you're a day trader, a long-term trader, momentum trader, indicators are very important. Other traders pay attention to indicators regardless of whatever time frame that you're trading on or whatever trading style you are using. Again, whether you're a day trader, momentum, long-term trader, traders pay attention to the technicals. The technicals are basically the footprint to the fundamentals. So those that are doing fundamentals, and whatever a stock is being bought or sold, it creates a trail, and with that trail there are these indicators that people use and put onto their charts that help them to kind of determine price direction of a stock and where a stock might move up to, where it might have resistance levels or where it might have support levels. The simple moving average, otherwise known as SMA, is one of the most popular. Again, I'm not going to go over all of the different moving averages right now, but SMA, otherwise known as simple moving average, and EMA, which is exponential moving average, those are very important indicators that traders look at. So this is a good website over here, investopedia.com. If you want to learn about more of a definition of something, how it works. Again, I'm going to read you the basic definition, but I'm going to show you most importantly on the charts what to look for. So again, simple moving average lines are great areas of support and resistance. Traders are looking at these lines; they're extremely important. So when you're hearing terms such as support and resistance, yes, candlesticks are very important. Looking at the top and the bottom of candlesticks, but also you want to look at the simple moving averages as well. The very popular simple moving averages are the 50 simple moving average, the 200. Those are probably the top, the two most top, the two most popular simple moving average lines. The 100 is as well, but the 50 and the 200 are really the most popular. As far as EMAs or exponential moving average lines, the 9, the 20, those are really the two most popular. Or some people will just use the 13, which is in between the 9 and the 20. So either the 9 and the 20 exponential or the 13 exponential. It's really a matter of your preference, whatever you're looking for. So what is a simple moving average? A simple moving average, otherwise known as an SMA, is an arithmetic moving average calculated by adding the closing price of the security for a number of time periods and then dividing this total by the total number of time periods. So, as shown in the chart above, many trades, I don't know where the chart above is, might be below here. Many traders watch for short-term averages to cross above longer-term averages to signal the beginning of an uptrend. Short-term averages can act as levels of support when the price experiences a pullback. So very, very simple: support and resistance. If you want to read more about simple moving average and SMA lines, come over here and read all about it. I'm not a very techie, and I try not to bore people with it, and that stuff kind of bores me. I like to see it more in real times and on a chart. So here's a chart of a 1 minute, a 5 minute, and a daily. I'm just going to focus in on the daily for right now. Again, everybody sets their charts up to their own personal preference. I personally am more of a day trader, so I look at the 1 minute, the 5 minute, and the daily chart. I usually have my on my 1 minute, I don't usually put simple moving averages. On my daily, I have them. Sometimes on my 5 minute, I will as well. But if you look here under my studies here, this is my Thinkorswim platform. I have the 50 simple moving average, which if you double click on it will be in the red. And then I have the 200 in the black. And then I have the 13 exponential moving average in the blue. I use the exponential because it's kind of like an in-between of the 9 and the 20, so it's kind of almost like following the trend or whatever the trend of a stock is doing. Again, all a matter of your preference, and it's all a matter of whatever you want to color choice or color code it. It's just how I have mine set up. So you'll see here the red and the black line. The red is the 50. You'll see right now on a price like this, the stock is below the 50 moving average, and it's right above the 200. Ideally, in a stock that's going up, you'll see that price would be above the 13 exponential moving average, above the 50, and above the 200. You can see over here, when the moving averages cross, you'll see now price is now below the 50, and now it's touching, possibly finding support at the 200 simple moving average. So traders will look at this. They'll look where price is in relation to these moving average lines and then determine, when a stock again is above the moving average lines, it's bullish. When it starts to go below, it becomes bearish. Now, exponential moving averages, the EMAs, they tend to move more quicker. They're more of the quicker time frames, whereas simple moving averages are more, again, 50 and 200 day. Those are more, a little bit further back time frames. So it's just a matter of that's going to help you to find support and resistance lines so that whether you're, let's say you're swing trading or long-term trading, you'll see, is price going to hit these certain levels and fall back down? Is it going to be resistance levels, or is it going to come down and find support? Is it going to cross over there? You're going to see visual areas of support and resistance. So the tops of candlesticks are very important for resistance. So you can see up here, here's a peak, kind of resistance area. Price kind of falls. If it ever goes back up again, that might be an area of resistance, but watch where the exponential moving averages are, along the way, or the simple moving averages and the exponential. You want to see what's happening. And as of right now, you'll see right now this 13 exponential moving average is an area of resistance. This 50 simple moving average is an area of resistance. For it to want to get maybe bullish again, it wants to get above these moving averages. So let me show you a few of them. Again, then you can put it on any chart time frame that you have. On this 5-minute one, I just have the 13. Actually, no, I do. I have the 13, the 50, and I think I actually have the 200 on this one as well. Yeah, and I just have it in purple. I just think I don't know why I haven't changed it over here yet. It's just kind of like you get used to it, seeing it, and that's it. So I kind of like, because I'm a day trader, I like to look things like on the 1 minute. I don't cloud it with the simple moving averages. I just have the 9 and the 20 exponential on my 1 minute. Then I'll have my 13 over here. Kind of gives me a little bit more of an equilibrium of what's happening. And then I'll have the 50 and the 200 as well. It's just a matter of my preference. Again, the 50 and the 200 simple moving average are the most popular. So traders will look at that when price hits those lines, whether it's resistance or support, they pay attention. That's why I have it on my charts. The 9 and the 20 exponential, very popular. The 13 is as well. It's just a matter of whatever your preference is on them. So sorry to kind of hammer it over and over again, but I just really want to say that it's so important to study these. You want to look, if you're new to the industry, you want to really review support and resistance. Stare at a bunch of charts. Look how they look, see what's actually happening, see what stocks do when they bounce off of these moving average lines. I'll pull up a few more right here. You'll see I'm just pulling up random ones. I don't even have a bias as them right now, or a bias towards any of them, because I just wanted to show you what it just looks like in just random time. You'll see right here on the daily chart here, this is the 50 moving average. It is above the 200, and now price is above that. So that may be potentially bullish, but now, so you don't have any simple moving averages or EMA lines above it. So that's when you're going to start looking at other areas of potential resistance that might be in its way. So when there's prices above the indicators, that's a good thing. Then you got to look at candlesticks in whole and half dollar amounts for other areas of potential support and resistance, because whole and half dollar amounts are psychological support and resistance areas. So again, when candlesticks are above these moving average lines, they're bullish. When they're below it, they're bearish. When price gets near them, you want to be aware of what's actually happening. Are they bouncing off? Are they going forward? You'll see here, if you don't really know these, again, we have over on our website, bullishbears.com, take our trading courses. We have courses that we offer for free to kind of explain this stuff. I just wanted to show it to you, just show you what it looks like. But you'll see this right here is an exponential moving average, and you'll see price going up and down, and it's kind of following it, and then it starts to fall. And then, again, traders will be aware of these other moving averages, the 50, and see what happens from there. You'll watch, if an exponential moving average of 13 crosses above or below the 50, sometimes things will happen. Again, this is after market hours, so I'm not really worried about that right now. But let me just show you a few more just to give you examples here. Right here, perfect example. This right here is kind of trading sideways, right? But it's also going down as well. So it's actually going sideways, but it's in a downtrend. And as you'll see, if you kind of could remove this, let me just remove the drawing here. You will see the red 50 moving average is right above the price. So the price, it's gone up a couple times, hit off of it, and it bounced back down. So you'll have the 200 up here, which is above the 50. So that's really bearish. So for this to turn around, it's got to get up above the 50, and then it's going to have the 200 in its way. And price ideally wants to clear above that for it to start getting into a potential bullish trend. So right now you can see the lines are above it. So that's a lot of resistance in its way. Let's pull up a couple more. Let me just pull up these right here. So this one right here, this is some random one. This is probably one that may have been maybe potentially bought out. Usually when a stock does this, there must be a buyout or something like that. But you'll see all the moving average lines down here right now. So there's nothing in its way right now, which doesn't mean it's necessarily going to go up. It may go up more. Something might happen with the buyout or whatever. So price might start to slowly gap down before it goes up. It might just go up. Who knows? But you'll see the moving average lines are way down here. This is a very bullish sign. So this is where price is farther away above the moving average lines. Let's do one or two more here. Actually, I think I just did this one. NVTA. So here's one where this is kind of like, you'll see the 50 is above the 200 and the 13 is above the 50 and the 200. So that's a bullish sign right here. So then what you want to do, let me clear that drawing. So now when price is above there, then you're going to want to look at these areas chart patterns, and you want to see, will a stock break above an area of candlestick resistance, or will it fall back down and find support at these moving average lines? So you can see here, it's bullish, but now it's running into potential resistance, and you want to see if price is going to break above it or fall back below it. If it gets rejected off of the resistance level here, it might start to it's going to naturally want to gravitate down to the 13 EMA or the 9 or the 20, whatever you have in your charts. Again, this is the 13, and then the next line of defense, the 50, the 200, and so on and so far down. We'll do one more here because repetition is the key. PBR. So, okay, here's one right here. The 200 is above. So now you have a 13 crossing the 50. So that is a bullish sign. So that's good when you have a nice crossover like that. That is really good. However, price is now going to find some resistance right up in this 976 area. So now if price is moving up, you want to be very aware of the fact that, hold on, maybe let me just do this here. Price will at some point, it might reject off this area before going up, but again, traders pay attention to it. If it gets rejected up here, then naturally you want to see where it's going to happen. Is it going to fall down to these areas? Again, these moving average lines are all about support and resistance, regardless of whatever trader you are, whether you're a day trader, momentum trader, long-term trader. Support and resistance is key. Finding patterns. So you want to look at the patterns that these candlesticks make, and then look at the moving average lines, the simple moving average lines of the 50 and the 200, which are the most popular. And also having the exponential moving averages. Decide whether you like the 9 and the 20, or whether you like the 13, or a combination. There really isn't a right or a wrong way. It's just a matter of what you're most comfortable with, and that's going to help you to find support and resistance level to determine your entries on whether you're going to be a day trader, swing trader, long-term trader. So